Hello, everyone. This is Gaurav Jain. I'm super excited to talk about further on the overdraft and how we can innovate this space. And I'm pretty excited to welcome this time our industry veteran, Kevin Moss.
Gaurav, thank you for having me today. I'm excited to be here, and I'm a consultant. I work with startups and financial institutions in fraud. Been doing a lot of work in the fraud space, but also help people with their credit and underwriting and account management strategies. Very excited to be here and look forward to our discussion. Neobanks like Varo and Chime and others have built small dollar uh, lines of credit that are integrated. They've also integrated credit cards with no interest and fees. And I think beside moving transactions to higher interchange levels, because credit interchange is higher than debit, it provides one of the reasons why people overdraft their traditional banking accounts is they're making themselves a loan. Like they have no other means. Like without that, maybe they go to payday lenders, and that's very, very expensive. So, so I think one thing that is evolving, which is a good thing, is very small dollar lending, where people can borrow $500 or $1,000 or and pay it back over a short period of time. And I think if fees go away or if fees diminish substantially, then that's hopefully will help more consumers be able to cure their overdraft and not end up getting, reported to early warning or checks or some other CRA, which effectively stays out there for 5 years. Knowing the way some banks' overdraft processing works, it's based on a handful of rules that they might have and a limit that may or may not be disclosed to them. Like, this is where the use of machine learning and AI, the history of how people have handled their deposit account, the transactions that they use, understanding the inflows and the outflows. Like, you can build very powerful models that can do a way better job in assessing the likelihood of curing an overdraft. So I think this is where valid systems can really help institutions by, the understanding and the expertise that Valid has in machine learning, in consortium data sources, and in building models that really help you identify what usually overdraft is a little different, but when it comes to fraud, usually it's a smaller population that creates the majority of the exposure. Valid can find 90% of the losses in the worst 1 or 1.5%. In overdraft, at any one time, like 15% plus or minus of a portfolio could be overdrawn. So it's a much bigger population. We're going to start to see merchant fees escalate because it's true that people pay a lot for overdraft fees today in some institutions, but what they avoid is a return check from a merchant, for example. And so I think what's going to happen is some of this is going to end up moving to the merchant.
That's all for now. I hope you guys have enjoyed it. Again, thanks, Kevin.
Thank you, Gaurav. Thank you. And I would just say to the audience, you guys should really talk to Valid Systems